We've got an exciting show lined up for you, filled with insights and analysis from the world of finance. To kick things off, let's take a look at what's been happening in the cryptocurrency space, specifically with Bitcoin. The flagship cryptocurrency has been on a downtrend for over 2 months now, erasing its gains for 2025 and pushing market sentiment into extreme fear. Just recently, it plunged to a 7-month low, trading below 90,000 at one point. Now, despite this correction, some experts believe that Bitcoin could be nearing a bottom. BitMine chair Tom Lee and Bitwise Asset Management CIO Matt Hogan have both suggested that we might see a turning point for Bitcoin as soon as this week. They point to signs of exhaustion in the sell-off and historical patterns that indicate a potential bottom formation. Lee notes that the recent decline is largely tied to a massive liquidation event on October 10 and growing investor anxiety ahead of the Federal Reserve's December meeting. However, he also mentions that there are emerging signs the sell-off may be losing steam, citing insights from Tom DeMark of DeMark Analytics. Hogan shares this view, seeing the recent downturn as a strong buying opportunity for long-term investors. He believes Bitcoin was the first to signal risk in the broader market and will likely be the first to bottom out. On-chain and technical metrics also support the case for a potential bottom. With over 28% of Bitcoin's circulating supply held at a loss, historically high levels that have marked market bottoms, and the appearance of a death cross on BTC's chart, some analysts think we might be close to a local bottom. Of course, it's essential to approach these predictions with caution and consider multiple perspectives. The cryptocurrency market is known for its volatility, and predicting its movements can be challenging. We'll continue to monitor the situation and bring you updates as more information becomes available. For now, it's clear that the next few days will be crucial in determining the direction of Bitcoin and the broader cryptocurrency market. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and markets in our middle segment today. The U.S. stock market has been experiencing a bit of a roller coaster ride lately, with some significant ups and downs. One of the main stories that's been making headlines is the surge in AI-related stocks, led by companies like NVIDIA. However, critics are warning that this surge may be unsustainable and that the market could be due for a correction. On the other hand, some investors are still bullish on the market, pointing to the fact that many of these AI-related stocks have been consistently performing well over the past few years. For example, NVIDIA is still up 39% for the year, despite experiencing a bit of a dip recently. Additionally, Warren Buffett's Berkshire Hathaway has taken a significant stake in Google's parent company, Alphabet, which could be seen as a vote of confidence in the market. But what about the Federal Reserve's role in all of this? The expectation had been that the Fed would continue to cut interest rates in an effort to shore up the slowing job market. However, with inflation remaining above target and the U.S. government shutdown delaying key economic data releases, some Fed officials are suggesting that they may need to wait for more clarity before making any further moves. It's a complex and nuanced situation, and as always, it's essential to approach the market with a critical and balanced perspective. We'll be keeping a close eye on these developments and bringing you updates as more information becomes available. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a closer look at some investment opportunities that could potentially generate long-term wealth. We've got 3 stocks on our radar: Coca-Cola, McDonald's, and Philip Morris International. These companies have a proven track record of success, with a history of paying and raising dividends. Coca-Cola, the beverage giant, has been around since the late 1800s and has become a global juggernaut with over 200 brands in its portfolio. Its steady success has produced 62 consecutive annual dividend increases, making it a reliable choice for investors. McDonald's, on the other hand, is a fast food giant with a massive supply chain and a reputation for offering affordable food. The company has raised its dividend for 49 consecutive years and continues to expand its store count globally. Philip Morris International, the leading tobacco company, may seem like an unlikely candidate for long-term wealth generation. However, the company has been successful in raising its dividend annually since 2008 and is making strides in smoke-free alternatives to cigarettes. Its emerging dominance in heated tobacco devices and oral nicotine salt pouches has analysts calling for low double-digit annualized earnings growth moving forward. While these stocks may not make you rich overnight, they have the potential to generate significant wealth over 2 or 3 decades. As with any investment, it's essential to do your research and consider your own financial goals and risk tolerance before making a decision. It's also worth noting that the Motley Fool Stock Advisor analyst team has identified what they believe are the 10 best stocks for investors to buy now, and Coca-Cola wasn't one of them. This serves as a reminder that there are always other investment opportunities available, and it's crucial to stay informed and adapt to changing market conditions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.